In today's video, we're going to talk about how much money you need to save for retirement and really what that looks like in regards to asset allocation in your investment portfolio. And then finally, we're going to get into how exactly to do that, meaning finding a reputable broker and getting into account types as you contribute to your retirement. I'm sure if you've been paying attention to what's been going on in the economy and stock market, the thought of investing may probably scare you a bit.
I am so scared.
I know I've been frazzled a bit by everything. I mean, it's no fun watching your investment accounts and retirement accounts losing thousands in value over the last several months. Who wants to watch their hard-earned money go down in flames? Now, no one has a crystal ball and can tell exactly what the market is going to do, but having a long-term mindset always wins, especially with investing. Just to provide a little background of what I mean, according to Titan.com, over the long term, the average historical stock market return has been about 7% a year after inflation. It's been more like 10 to 11% before inflation. See, the truth about the stock market is that it's going to have its ups and downs, but over the long term, markets tend to go up, especially as our economy expands. Because the markets do this, it's one of the many reasons people use investing strategies like dollar cost averaging and index funds. I'm personally a huge fan of both of those. With all that in mind, let's get into that major question: how much money should you save for retirement? Saving for retirement can seem intimidating, especially if you're just starting out in your career. But the earlier you start saving, the more time your money has to grow and compound. There are a few different factors to consider when determining how much you need to save for retirement, including your desired retirement age, your projected retirement expenses, and your current savings. Think about that a little. I know I have, and one way to determine how much you need to save is to use a retirement calculator. And you can find these simply by doing a Google search.
Is it that easy?
If you're watching this, you may already know this, but these calculators will ask for input on your current age, desired retirement age, current savings, and projected retirement expenses, among others, and will then provide an estimate of how much you need to save each month in order to reach your retirement goal. You know, the main part of what this video is all about. I decided to test it out so you can see how it works firsthand. There are plenty of options out there, but I happen to like Bankrate's option. They don't require you to sign up or anything to run the calculator, so that makes it kind of nice, because other companies force you to sign up or give your email address before you put your information with their calculator. You simply put your information in that they ask for, and it gives you some really nice charts and valuable information as you consider where you are in life and your suggested plan of action for retirement. The main reason I decided to resort to a retirement calculator is because everyone's situation is different. We're all in different income levels, stages of life, and have varying goals on what we want retirement to look like. So for someone to say this is the one way to know how much to save in retirement is not very realistic. Using a free retirement calculator will assist in helping you determine how much you need to save, especially if you have no idea. It will help to assess the feasibility of your retirement goals. It will help you plan for your retirement income and help you to compare different retirement options. Overall, a retirement calculator is a useful tool for really anyone planning for their retirement, as it can help you make informed decisions about your savings and investments and ensure that you have enough money to retire comfortably. Now, if using a retirement calculator isn't for you, then I found this other resource from Fidelity to be useful as I consider how much to save for retirement. Of course, this model does assume that a person saves 15% of their income annually beginning at age 25, which includes any employer match. It assumes they invest more than 50% on average of their savings in stocks over their lifetime. It assumes they're retiring at age 67 and plans to maintain their pre-retirement lifestyle in retirement. According to their calculations, saving 10 times your pre-retirement income by age 67, along with implementing other strategies, should allow you to maintain your current lifestyle during retirement. While this goal may appear to be quite ambitious, you have a significant amount of time to work towards it. To help you stay on track, they suggest these age-based milestones, aiming to save at least 1 times your income by age 30, 3 times your income by age 40, 6 times your income by age 50, 8 times your income by age 60, and finally at least 10 times by age 67. Of course, this presents much more of a hypothetical situation, but I like this because it gives you checkpoints throughout your life with your retirement savings. Let's now transition into asset allocation for a solid portfolio. Asset allocation refers to the process of dividing an investment portfolio among different asset categories such as stocks, bonds, cash, as well as real estate, commodities, or even cryptocurrency these days. Your specific asset allocation of the portfolio will depend on the individual's goal, risk tolerance, and investment time horizon. A solid portfolio typically includes a diversified mix of assets that is appropriate for the investor's financial situation and investment objectives. Generally, a solid portfolio will aim to balance risk and reward by including a mix of asset classes that have the potential to generate returns in different market conditions. It is important to note that asset allocation does not guarantee a profit or protect against loss. One other thing, it is important to periodically review and rebalance a portfolio to ensure that it remains aligned with the investor's goals and risk tolerance. I want to just share a few basic asset allocation models from Vanguard, as there's really no right or wrong model. Factors you will want to consider when building your portfolio include diversification, meaning different sectors, industries, and geographic locations. Quality, meaning companies invested have strong financials and management teams. Valuation, looking for attractive valuations relative to growth prospects. Income, this is for investors seeking income from dividends. And the long-term focus, this means focusing on stocks with potential for long-term growth. Continuing along, it's important to use a reputable broker when saving for retirement. After all, it is pretty important when your financial livelihood depends on it. Look for a broker that is regulated by a reputable organization in the US. This would be the Securities and Exchange Commission, the SEC. Check the broker's track record. Look for a broker that has a long history of operation and a good reputation in the industry. Consider the broker's fees and commissions. While it is normal for brokers to charge fees and commissions for their services, be wary of brokers that charge excessively high fees or hidden commissions. Be cautious of brokers that make unrealistic or exaggerated claims about their services or investment opportunities. Make sure the broker is transparent about their business practices and is willing to answer any questions you may have. Check if the broker offers a variety of investment products and tools that meet your needs. Specifically for me, I like Fidelity and Vanguard. Now, that's not to say that there aren't many others that work well for people. I prefer them because they are both well established and have a long history in the financial industry. They have a strong reputation for offering high quality investment products and services, including mutual funds, ETFs, and individual stocks and bonds. They're also known for their low fees, which can help investors save money in trading costs and keep more of their returns. I mentioned that it is important to find a broker that offers high quality investment products and services. So in that regard, let's finish up discussing account types. The first type of investment accounts are employer-sponsored retirement plans. These include 401ks, 403bs, and pension plans offered through your employer. These plans typically offer tax benefits and may also offer employer matching contributions. These are typically going to be your go-to first option if available in almost all cases. If your employer offers a match, take full advantage of that opportunity. The other type of accounts include individual retirement accounts. There are several types of IRAs, including traditional IRAs, Roth IRAs, and SEP IRAs. My personal favorite are the Roth option because of the tax-free growth they offer. As is the case with all this information, consult with a financial advisor or tax professional to help make the right decisions for your unique situation. I personally take advantage of my employer's pension plan and then try to max out a Roth IRA when or if I have the money to do so. So to summarize, it's important to remember the 3 A's: amount, account, and asset mix. Amount: how much are you saving annually? Anything over 15%, and I would say you are on the right track. Account: what kind of accounts are you using to save? Are there tax advantages to consider? And asset mix: what are you investing in? Stocks, bonds, ETFs, mutual funds, real estate, crypto. In my experience, the best asset classes to own are ones with a strong track record and built-in diversity, so I always recommend ETFs and index funds, of course real estate if you can find a deal. Thank you so much for watching. Just a reminder, I'm Sean with Gym Class Finance, where I talk all things budgeting, investing, and side hustles in ways everyone understands, or at least I hope they do. If you found value in this video, please give this video a like or share and even leave us a comment below.